by Henning Gloystein, Singapore, July 7. Singapore, July 7. Oil prices fell by more than 1% early on Friday, with U.S. crude futures dipping below $45 per barrel as news of a rise in U.S. production added to earlier reports that OPEC output was also on the rise. Brent crude futures, the international benchmark for oil prices, were trading down 59 cents, or 1.2%, at $47.52 per barrel by 0226 GMT, 3:26 a.m. ET. U.S. West Texas Intermediate WTI crude futures were at $44.94 per barrel, down 58 cents, or 1.3%. News of the production rise outweighed positive sentiment from falling crude and gasoline inventories in the United States. Oil prices were initially stronger off the back of the better-than-expected drawdown in inventories. However, the exuberance was short-lived, as the market turned its attention to another increase in U.S. production. NZ Bank said on Friday, U.S. crude inventories fell by 6.3 million barrels in the week to June 30 to 502.9 million barrels, according to the U.S. Energy Information Administration (EIA). Gasoline stocks fell by 3.7 million barrels to 237.3 million barrels. The data suggested strong demand in the United States, but this was offset by a 1% rise in weekly U.S. oil production to 9.34 million barrels per day (BPD). Since mid-2016, that's an increase of more than 10%. The rising U.S. output comes as supplies from the Organization of the Petroleum Exporting Countries, OPEC, rose for a second month in a row in June, according to Thomson Reuters Oil Research, despite its pledge to hold back production between January this year and March 2018. OPEC exported 25.92 million barrels per day (BPD) in June, 450,000 barrels of oil per day more than in May, and 1.9 million barrels of oil per day more than a year earlier. If OPEC was unable to balance the market, change would likely be forced on it by oil prices, said Morgan Stanley. The U.S. bank said that a WTI price of $46 to $50 per barrel would likely prevent U.S. production from rising in the mid to long term, but that prices will need to be in the low $40s for U.S. output to fall significantly. Morgan Stanley said it expected WTI sub $50 per barrel to mid-2018, reporting by Henning Gloystein, editing by Richard Pullen.